But those higher yields that we've been watching all week, I just wonder how big of a concern that is for you, how big of a concern it is for the business leaders that you talk to along these lines. If rates are going higher, regardless of what the Fed decides to do or not do, what you think about losing control of the long end of the curve, and what you think about what that means for the economy.
Yeah, each of those is critically important. Now, the market determines the long rate conditions. As you say, the Fed, we're setting the Fed funds rate. We're looking at the short end.
Okay, so that's one of those lessons that we talk about where I say President Trump is kind of at odds with the Federal Reserve because they kind of handle the front end of the yield curve. And we talk about this all the time. That's why mortgage rates, they're not going to go to 5.5% or 6% anytime soon because the front end that the Federal Reserve controls is high. The federal funds rate is 4.25% to 4.5%. So you usually add 1.5%, say 2% to that. That would be maybe your mortgage rates. That's where we're at 7% right now. There's a bigger adjustment in there for the risk premium, but that's exactly what I wanted you guys to hear in this video. I'll just conclude it. There's only a little bit of time left, but this was kind of right in the wheelhouse of exactly what's going on. Every day something's changing. I get a lot of grief down below. I don't know what I'm talking about and things like that. Folks, when the Federal Reserve members don't even really know what's around the next corner, how do you expect me to do it? So I'm just trying my best to kind of explain this to you and just put it in layman's terms to help you understand kind of what's going to happen and what's going on and what the expectations are for this. It's kind of like, hopefully you're going to Economics 102 now versus 101. We're getting a little more advanced. So let's conclude this, and then I'll be back to show you market reactions and the market news that we have so far today.
The long end are the conditions in the economy, and those can be causes or those can be symptoms. To the extent that the conditions are getting tighter on the long end, that does affect investment decisions, consumer durable purchases pretty directly. So I would think, want to factor that in is there going to be slowdown? At the same time, if we're going to get a big fiscal stimulus that's pushing back the other way in the short run, we have to weigh off considerations like that too.